Hey, how you doing? Emmett Dempsey again, Treasure Coast Mortgage. Welcome to the February 2025 mortgage and real estate update. Basically, it's been a very interesting month. I'm going to go over where the market is, some different stories about the housing market, well, some testimonials of some clients we helped, and thank them as well. So this is my website here. Like, it's pretty cool. The Mets are back in town, so spring training is all the rage right now. Traffic is not very nice, but it's definitely a great time of year. Okay, so that being said, you go to tcmortgage.com. That's my little pop up there, and you go to today's rates. This is generally an average of nationwide average about where they're at. We're over 7% about a month ago. So, a good 40 basis points lower, and depending on in your VA rates, in the low sixes. So, basically, we're going the right direction as far as interest rates dropping, is my point. But you can see here, this is the charts. Basically, green is good, but red is bad. Effectively, you can see where we were mid-January here. So as the price of a bond rises, its yield drops, and that's what we care about. Of course, when you're making a mortgage payment and want a lower interest rate, that's the price of a bond. You can see we had some good days, and what is causing all this? Of course, there's a lot in the news about Trump demanding rates drop, and Doge, and all the things that are going on with the federal government. That could have an effect on it, but ultimately it's because today we had a really good PCE, or consumer expenditure. So it's the measure of inflation, PCE, producer consumption expenditure. So that's the measure of inflation, because we know about CPI, consumer price index. But the Fed uses a different measurement. It strips out it strips out the most inflatable things like food, but basically that's what they use. So that measure of inflation came in as normal. So there's going to be two different things that are going to move interest rates, guys. There's going to be, of course, inflation and employment. And I believe, if you look at, I think the Biden administration really sugarcoated a lot of things in the economy. I think we're going to see some negative stories because I think they wanted to lay it on Trump's lap. And as the economy catches up to reality, you never want to wish bad or people lose their jobs, but that effectively is what the markets are looking for. They're looking for employment, as unemployment claims go up. That's going to cause a flood of money away from risky assets. They call it a flight to safety. You sell stocks and whatnot, and you go into bonds, which are usually lower yield, but they're safer returns. But you can see a lot of that here. We've had some really good days here on consecutive greens, and it just seems to be pushing through all these Fibonacci levels. Different trading patterns. So and we've blown away all the moving averages. So we are on the way up as far as price, down in yield. But again, I caution with interest rates, you never never know where they're going to go, because ultimately, if we have hot inflation, we're still catching up from the 2020 money printing, as all those things happen. So. Okay, so let's take a look here at also some stories. Now, what you may be seeing out there from a lot of the housing crash bros is, inventory spiking. And I talked a little bit about this last month about you need to ask yourself, when are you starting to look at it? From 2018 to now, it's not as stark of an increase because they're looking at from a certain time and make it look worse. There's a lot of folks here on YouTube that are housing crash bros that just have been calling for a crash the last 5 years, and okay, great. So that's but they've been wrong. So ultimately, we are still underbuilt as far as household formation versus inventory in this country. That's just a fact. Now, there's going to be certain markets that had a little bit different, and we're here in Florida. Here's one of them. Basically, Florida's the hottest destinations during the pandemic. And they're saying you get multiple offers. I know here in my business, my buyers are getting concessions. So maybe we have flipped to a buyer's market, a little bit better, not as a frothy seller's market, but I think it's evened out, and buyers are getting concessions and full price offers and everything they need to close on homes. So I think it's a good thing if buyers come off the sidelines and as rates come down and it's not so scary. I think we can see some good action for the spring buying market before school ends. So let's take a look here for this month. We close a lot of different kinds of loans. A lot of VA. Like I said, I'm a veteran of the VA loan. In Florida and Georgia. Give me a call. I love an opportunity to help out a fellow veteran. Another, some FHA, also some DSCR, that's your non-QM investor loans. As a broker, we can do a lot of different kinds of loans. And as far as marketing, you might see if you're on Facebook, I've been starting to do some reverse mortgage webinars. So if you're a viewer, like several people have, scores of people have watched a lot of my reverse mortgage content, and thank you so much for that. But I'm starting to do webinars. So do live webinars, kind of go in depth, a little bit more than the videos did. Ask any questions one-on-one on the webinar, and of course schedule an appointment if you want a personalized analysis. But so we did a lot of different kinds of loans. One of which was a really good VA IRRRL loan. Apparently, I'm on some Reddit thread because I've been getting all kinds of calls from out of state. I've been referring them to my colleagues, but thank you for that. But really good IRRRL loan. Here's a good Google review, and of course you can just Google my name and you can see them all. Another 5-star review. Can't say enough about Emmett and his team. I think the thing that stood out the most was the videos he created to really explain each process. You knew the right time to lock the rate, and all in all, not one complaint. Thanks again for your attentiveness. So I use great. Yes, we are on YouTube and growing on Instagram, etc. But I also do every loan I do personalized videos, kind of like this. And so I use a system also called Mortgage Coach, where I lay out your options. And I think video and screen share is just because everyone's got a phone, so that's how I deliver my mortgage advice. So you have to ask yourself, if people are just emailing you a PDF of a fee sheet, it's not interactive. It doesn't tell you anything. And there's also different choices that you can do. So make it so demand a higher quality. I think I saw a stat that almost 80% of home buyers go with the first mortgage person that they refer to. And that's just got to change, guys. I mean, you should demand better from me, demand better from the mortgage industry, to earn your business and take care of your family's mortgage needs. So I'm definitely throwing my hat in the ring for that. So if you're looking to buy soon, maybe take advantage of this little buyer's market. If you're in Florida and Georgia, give me a call. Let me know how I can help. Definitely walk through all of the different options and to see how it can help. Particularly if you're a veteran, a fellow veteran, I'm from Army veteran myself. I would love to help you guys out. So that being said, that is that. And just to recap here, so interest rates are doing good for now. We'll take it. So we're going to continue to take it. Be careful of the housing crash narrative out there. Yes, it's softening a little bit, and maybe you can dip your toes back in. But to say that there's a surge in buyers and the 2008 here again, that's just not true, guys. So again, if you worked with me in the past, thank you so much. Watch the videos, and again, I hope to hear from you soon. And I will continue to put them out, and we'll talk to you next month.